Hello and welcome to our Mines and Money 5 at 5 show, which today is sponsored by Kuya Silver, Aurcana Resources, and is brought to you by Ignite Global and also the Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. In order to make it as interactive as possible, please have your videos switched on. You can either ask a question in the chat box function, which you'll see at the bottom of the screen, where I've gone and posted a few welcoming remarks. Also, you can also click on the participants button, ask yourself to be unmuted, and you can then go and ask your question live. Today's show is on silver, and we have a great lineup of guests. They are David Stein, CEO Kuya Silver, and they won a recent pitch battle at the Mines and Money EMA Roadshow. We have Kevin Drover, CEO of Aurcana Resources, another excellent silver mining project, and Richard Gonda, president of Ignite Capital. So a warm welcome to our guests. Perhaps we can start off by asking my colleague Sinead if we can bring up today's polling question. If we can just put that up on the screen now, Sinead. And if you can just launch the polling. Very straightforward question to get everyone, is do you hold shares in silver mining stocks? I'm kind of hoping we're going to get near 100%, bearing in mind this is a silver themed 5 at 5 show. But whilst everyone's voting, perhaps I can ask Richard, why does silver have why kind of silver, and why are you specifically interested in silver mining stocks?
Yeah, look, that's a good question. A lot of people in the mining sector, or even those who aren't, tend to favour gold because it's in some ways better known, it's more out there. I and others like silver a lot because of the fact that it is known to be always needed. It's got great demand in jewelry. It's got great demand in the industrial sector, solar panels, batteries, medical equipment, photography. It's always needed, and it always comes up as being next to gold, around gold, above gold, below gold. So I'm a big proponent of silver for those reasons. Mm-hmm. And it's become very interesting if you look at the charts and if you look at the history of silver with the bunker hunts trying to corner the silver market. The Reddit crowd recently got onto silver and tried to push it up a little bit, fell back. So they're the major reasons, I think. Mm-hmm.
And can you perhaps talk a little bit about the supply-demand dynamics? What are the key drivers?
Well, the key drivers are I guess, probably 2 or 3 factors. One is China. What is China doing with its silver? Some people say China stores a lot of silver. There's one factor. The other factor, of course, is the silver-gold ratio comes into play. The other factor is the extent to which the large economies of the world that produce and manufacture silver from the mines. As we know, it's Mexico and Peru, where their economies are at and how their production is going. And then, of course, you get factors like COVID in relation to the slowdown. So I guess they're the major factors in relation to the input and delivery of silver.
And then you mentioned the silver-gold ratio. Are you a believer in the silver-gold ratio thesis?
Well, that's a good question. The answer is I'm on the fence. It's very simple. You take the price of gold and then you divide it by the price of silver. The answer is I'm on the fence because it moves all over the place. Some people say it should be at 60. Others should say it gets interesting when it's lower or higher. I think our guests, David from Kuya and Kevin from Aurcana may be just as well equipped to answer that.
Yeah, I'd actually like to bring in like David and kind of Kevin at sort of this stage, because I know that when I talk to silver miners, everyone has a different view about the gold and silver investment thesis. I mean, going to yourself first, David, where do you stand?
Well, where I stand is I actually think the gold silver ratio is pretty important to watch, because about 80% of the move in silver can be explained by the move in gold. You know, if you actually just look at the stats of the two metals and how they trade daily, and then the other 20%, you know, is something else that's going on. So, you know, from my analysis, what I've kind of noted is that when we do get into precious metals bull markets, both go up, both metals, gold and silver go up, but silver goes up more. And so from trough to peak, it will go up more, between 50 and 100, maybe sometimes even more than 100% in terms of the outperformance of silver over gold. And when you think about why that is, it actually kind of makes sense, because the silver market is much smaller. So when the billions of dollars of investment go into the silver market, it pushes the price up much higher than if those dollars go into the gold market, which is like, you know, kind of a drop in the ocean, right? So I think what the silver gold ratio tells us, I guess I'll agree with Richard that the absolute number is not that useful, but in my opinion, but the trend of it is really useful, because what should happen is when we are in a precious metals bull market, the ratio should be falling, because silver will be outperforming gold. So both metals are good, you know, gold, you know, not saying that, you know, gold isn't a worthy investment, but when we do get into that type of a market, silver outperforms, and we are starting to see that. We've been seeing that, I think, for the last year or so, and that's something that could last for several more years. And in which case, at the peak, you'd probably see the silver or the gold to silver ratio, you know, somewhere 30 or lower, I would say.
Mm-hmm. And what do you think, Kevin?
Well, I would certainly agree with both Richard and David, but you know, I think there's another factor here that may change all of this on a go-forward basis. And you know, with the world on the edge of you know, really jumping into the renewable resources and the Paris Accords and all of these kinds of things, I think all of that bodes pretty well for the silver and you know, what it may do relative to the gold silver ratio. You know, my opinion is, if the world follows through on what it says it's going to do and hold the you know, the Earth's temperature at between 1.5 and 2 degrees, we're going to need to double the production of silver just for the solar panels, the you know, for electric cars and vehicles. That's going to put a real upward pressure on the price of silver, in my opinion, in order to achieve those targets. And I could, you know, I kind of envision seeing silver being certainly much higher priced than where it is, and that will certainly, I think, in the future, change the gold silver ratio. Gold is pretty useless other than putting it in a vault. You know, it's not really, it doesn't have much of a demand other than it feels great, and you know, it's nice and great when it's 22 karat and on your finger kind of thing. But silver has a real place in the future here, and I think that's really where it all is.
Mm-hmm. Oh, and Richard, do you have a price target for silver for 2021 as to where you expect it to go?
Well, we're right around 28. It swings between 27.5 and 28.60. I think silver could hit 30 again and then maybe rise above. It's very interesting. If you follow one of the major chartists or news services called Kitco, KITCO, for those of you who may not be familiar with it, it seems to give a fairly good, well-rounded view of the silver market, the silver price, plus other commodities, including gold. It depends really how bullish you want to be. I would say that it's probably going to stay right around 28, 29, maybe swing between 27 and 30. But Kevin's right. It could move up. It could move up beyond 30. That could happen. But right around here, it could break out. So if I had to guess by the end of the year, depending on how the markets are in the US and in China, I would say right around 29, perhaps. That would be my guess, but I wouldn't be surprised if it was 30, 31, or even 27.
Okay. And then just as a bit of a brief intro into the two mining companies we've been here more from in a moment, you've obviously handpicked these two companies, Aurcana and Kuya Silver. In brief, what sort of attracts you about both of these companies that we're about to hear from?
Well, both of these companies are very different. So one of the reasons that we have them on today is because they are not competitive, non-competitive. Kuya is in Peru and Aurcana is in Colorado and Texas. So that's the first reason. Second reason is they're both in their own way unique and in my view, well above an average, shall we say, emerging silver player, traded in Canada and also able to be traded here in the US. So Kuya is Kuya in Canada. In the US, it trades KUYAF, and Aurcana, AUN, Apple Undergo Nancy in Canada, and in the US, AUNFF. So they're both very interesting, and you'll hear more about them. I guess the other reason that I'm interested in them, and others are or could be, is because both David and Kevin are very good on the execution side. So a lot of silver companies in the US, in Canada, US, Australia, and traded on the AIM, a lot of the smaller ones tend to be, not all of them, but very strong on the promote side. Neither of these companies are, in my view, promotional plays. They're execution plays. And both David, who I've come to know, and he'll talk about himself a little bit, hopefully. This is his mission, to make this company a major player in the silver mining silver. And Kevin has essentially taken Aurcana from being a questionable play to now one that could emerge as a mid-tier player in the silver. So those are the major reasons that I think they're both well above average in the smaller scale silver capital markets.
Definitely.
Those are the major reasons, and that neither on this forum are competing because they're in different jurisdictions and at different stages of development.
Mm-hmm. Yeah, definitely. And I think we're just going to go and close the poll now, and hopefully the poll is going to come up on your screen. So, 68% of the audience actually invest into silver mining stocks, 32% don't. So that means there's definitely a lot of potential investors for both of our miners to go and win over, which kind of segues nicely into our first mining update. So I'm just going to ask my colleague Sinead just to go and share the screen with Kuya Silver's slides. So they should just be coming up shortly. Just a very brief intro for Kuya Silver. As I mentioned at the start, they won our mining pitch battle at our Mines and Money EMA Roadshow last week. David Stein, who you've just heard from, is their CEO. David, why did the investors at the Mines and Money Roadshow pick Kuya Silver?
Well, I think it's because we or I was able to, kind of demonstrate a path towards, making this company, 10 times more valuable than it is today. And that was, that was the title of the pitch. And I'm not going to regurgitate the pitch battle. People are obviously encouraged to hear it again. But yeah, I mean, that's the bottom line is that I think that's what, that was the secret to my success in the pitch battle was I convinced people that it is possible and there is a path there to doing that. And, it is execution, as Richard said. And, we've been, we were able to get an EIA approved last year in Peru. That's probably, in terms of our very young company, that's probably the biggest operational accomplishment we've had to date. Raising money and all that kind of stuff is great, and every company does that. But I think getting our EIA approved was a real key factor to demonstrating that we can move this project forward, Bethania and Peru. So if you want to just jump to the 2 slides ahead, yeah. So again, we don't have a lot of time, but really the point I wanted to make with this slide, and really the reason why I'm in this, why I started the company, was I see a huge potential. There's very few silver producers out there where they produce more than 50% of their revenue from silver. And, companies like, for example, IA and GoGold are more recent examples. Or if you want to go back into history, you look at First Majestic in their early days and Pan American in their early days. They start off with one mine, not even a lot of production maybe, but the market likes the exploration potential. They like the fact that they have cash flow, which obviously means less dilution for shareholders. And they like the fact that there's a clear path to growth, and they give these companies, pretty big valuations. So there's no reason in my mind why we can't get that kind of valuation when we bring, Bethania into production. And, that's really what I'm aiming to do without issuing too much, in the way of dilution. We can certainly get to that kind of, IA GoGold type valuation. And that, based on where our share price would be right now, would probably be about a 6x, not a 10x. And then if you go to the next slide, the difference from 6 to 10 is really the silver market. So then if you then layer on, remember, those guys are valued at 700 million today with the silver price at $28. So then if we go to the silver price at 30, 35, 40, which I think it will get to, there's no reason why not, in fact, then you're going to see billions of more dollars entering the silver market in what is a very small market. I think the whole market cap of the silver producers out there is less than 10 billion, and that includes First Majestic, which is kind of veering into gold a little bit. So we and the other silver mining companies, the few that there are out there, will benefit from that, and that's what would take our valuation even higher. So that's a huge opportunity. We've got great exploration that we can demonstrate growth with as we go along, but we're not only about the exploration, because we've got the production story as well. And I think that's a big differentiating factor from Kuya versus, let's say 90% of the other silver juniors or small cap silvers that are out there.
Okay. Thank you very much for that. I'll probably kick off with the first question, David. I think I saw in a news release you've recently acquired, is it 800 kilometers worth of concessions? Can you just elaborate a bit about that?
Yeah, 800 hectares. It's a package of claims that we've had our eye on, for years, frankly, and we got into serious negotiations about 5-6 months ago, and we just closed it about a week ago. So it's exciting for us, because in the valley where the Bethania mine is, this is actually the next most advanced kind of silver prospect out there. The Bethania mine has been, it's mined for about 40 years. And it's a small mine, but it's been going. Obviously, we plan on making it a lot bigger. But it's established. You know, it was a permitted mine. Okay. Now, just across the valley, we know about this Carmelita mine, and it was more of an artisanal mine. So it kind of makes me think of what Bethania might have been like 20 or 25 years ago, would have been this. But when you look at the surface expression of the veins that these guys were mining, this Carmelita mine, it's almost exactly the same size as Bethania. Okay. It's just, you know, it's just on the next hill over in the valley. So, and it's kind of more or less along strike from our Bethania vein system as well. So, look, we don't know that much about it yet, other than the fact that they were mining. We took some samples when we were there doing our due diligence. They were very good. They were, again, very similar to the types of material, you know, silver plus minus lead zinc that we get at Bethania. And so we really think we've got, you know, another really high quality prospect here. And if we do find anything, you know, economically interesting, we've got the Bethania mine just down the road. We're going to be, you know, we're planning to build a plant there. So we can process it there without a lot of CapEx.
Thank you for that. Richard, do you have any questions for David?
Yeah, I've got a couple of questions, David, but I think that you may want to touch on a little bit of your background, because I know that you were in the capital markets on the banking side, on the finance side, and then after several years of success there, you took it upon yourself to start Kuya. And look, I'm impressed, because you've done exactly what you said you were going to do. And fortunately, I was able to get a position as you were listing. And it's been an interesting rise, and a good rise, and a systemic rise. But, you know, when we talk about silver and other commodities in foreign jurisdictions, and Peru is in a foreign jurisdiction, there is some risk, I suppose, that we should talk about. So we know that the elections are coming to a runoff on the 6th of June, and we saw the price come off a little bit when there was an announcement of the runoff. You're now trading right around 220, 223. It's been as high as 285, 290. So one could expect there could be a rise there. If Fujimori, the candidate to the right, is successful. Can you talk then, David, a little bit about what investors should be thinking about in relation to the June 6 elections, whether we should be thinking about it at all, or touch on that?
Well, you know, it's fair to think about it. I think every 4 or 5 years in these Latin American countries,
David, you just seem to have gone on mute there. I'm not too sure if there's a problem, but we can't hear you, even though you're looking to be unmuted.
Hear me now?
We can hear you now, clearly now, David.
Oh, okay. So what I was saying is that you know, this sort of, you know, these elections in these Latin American countries happen every every 4 or 5 years, and they seem to have a bigger impact in Latin America than they would in Canada, US, because you tend to have potentially the politics tend to get pretty drastic. We've seen this in Peru before. Even some of the left-wing guys who've been elected, let's say 10, 15 years ago, not a whole lot changed. So, and I mean, the other factor here is that you've got a Congress that's quite split, and it's well represented by business-friendly parties. But there's probably like 8 or 9 parties that have representation in the Peru Congress. And so depending on how they decide to work together will also impact a lot of what will happen with regards to whether or not any laws can be changed post-election. So look, I think Fujimori can probably do a better job at building a coalition in the Congress, but But nothing is a sure thing on either side. And to be honest, I think Peru's got other challenges as well. More important than the election is that they've really struggled to get COVID under control there, and they're kind of not behind the world in similar to Brazil in terms of the how that's been impacting life in Peru, and so all we want to see is some stability there, and hopefully either candidate can provide that after the fuss dies down.
Mm-hmm.
Okay, so David, just a little bit on the economics here. What's your mine life? What's your cash cost to get the silver, your all-in cash cost to get the silver out? And what's your resource quantity in ounces?
Well, look, we put out a 43-101 report that we're in the process of updating. So basically all of this is we're still reviewing all this and updating all these things. We know we've got a historical resource that the previous owners kind of reported to us. We think that gives us several years of mining to start off with. And we're very confident that the cash costs will be low and very, very competitive. And the reason I'm confident of that is because we know what these guys were producing at back in 2015 as a toll milling operation, and it would actually be extremely profitable today. The silver price was lower in 2015, 2016. Silver price is obviously at $27 right now. Would have given them, if this was still operating, a huge margin. And by building our own plant, we should be able to drop the costs even further. So look, I think we've got a great project, and we'll be continuing to update the market on the numbers as we. So
would your cash costs, all-in cash costs, be around $8.50, $8.50, somewhere around there, US?
That would be low. I don't think they'll be that low. The all-in costs they'll be higher than that. It'll be probably, if I were to guess right now, it'd be in the low teens.
Okay. All right.
Okay. Excellent.
Okay.
I think in the interest of time, we're going to move on to the next presentation. I do see there's a few questions in the chat box that we'll probably come back to at the end, because they're probably questions pertinent for all three of today's guests. But let's move on to our next mining update. You have heard from him before at the start of the show, but Kevin Drover has more than 40 years of both domestic and international experience in operations, project development, management, and process re-engineering, with both developing and producing companies. Today, Kevin is here to talk about Aurcana resources. Over to you, Kevin.
Thanks, Andrew, and glad to be here, everybody. I'm glad you could spend a little bit of time with us and hear about the companies and whatnot. Aurcana, of course, we're a silver company. We're wholly located within the continental United States. We have two projects. I'll talk about the second one first, the Shafter mine, most recently in production in 2013, I think. It's fully permitted. It's about a 3-hour drive southeast of El Paso is the location, down near Marfa, Texas. There's a mill on site, a 1,500 ton a day mill on site. Power is turned on. We're on care and maintenance, but we could, literally turn this thing on tomorrow if we wanted to. It is at a PEA level. We need to do some more technical work on that, but we believe that 18 to 24 months from now, this could be a mine that's back into production. We've got a pristine ore body that's there that was first developed by the Goldfields group who owned this some time back. They did some work on this, and this part of the ore body was never mined. We're doing a fair bit of work, technical work behind the scenes right now, going back and revisiting that. We may do a small drill program, although from the work we're doing, it looks like maybe an underground drill program may be the better way to go. But nonetheless, we wouldn't put this into production at a PEA level. We would want to do a feasibility study And the earliest that we see ourselves getting into something like that would be later this fall kind of thing. But, you know, if you think about it, in 18 to 24 months, it would be a great add-on to our existing Revenue Virginia's mine that we're putting into production really soon. We think Shafter might do something between 2.5 to 3 million ounces a year. It's pure silver, no byproduct credits. But the real topic of our conversation probably this afternoon to tell you about is the Revenue Virginia's mine that's located in southwest Colorado. It is fully permitted. We have a mill on site. It's actually located underground. We are heading to production. We should be turning the mill on sometime after the 10th of July. That's our target date to put first ore through the mill that we recently announced this. So it's our flagship. It's a silver mine with some gold and some lead zinc base metal credits. About 71% of the revenue comes from silver. So it is certainly primary silver. But as I said, it's located in the US, in Colorado. It's fully permitted for production. We are fully funded for production for the restart, and we have a substantial contingency. We do not intend at the moment, nor expect that we'll need to go back to the market in order for us to get to cash flow positive. We're anticipating first ore through the mill in July. We're anticipating ramping up production in August to about 110, 111 tons per day, and be at full production and cash flow positive in September. We have our full management team on site here. I moved down from Vancouver. Our head office is in Vancouver, but I moved down here to be close to the site that I could oversee this mine going back into production and, you know, be able to report firsthand back to my board. Our cost of production, based on our feasibility study that was done by SRK Engineering, is $8 an ounce on a pure silver basis, $10.71 on a silver equivalent basis. We've seen some price pressures from a labor perspective, as well as from consumables such as steel, ground support, things like that. So we're anticipating that our costs are going to come in a bit higher than that on an all-in sustaining cost basis. We're thinking somewhere between $9 to $9.50, which I think is still pretty respectable, and we'd probably be one of the lowest cost producers, certainly in the United States and around the world. Right now, we have about 126 people on site. We got about 45 contractors. We're doing our underground development, getting ourselves in a position to have our first 2 stopes available in June, as a matter of fact, and we'll be producing ore, and we'll stockpile some before we get to production. This is a mine, narrow vein, of course. We have 9 primary veins. Virtually all of our reserves. We have some reserves on one of the other veins, but virtually everything is on one vein. All these other veins have all been in production at one point in time in the past or another. We've really not had time to do any exploration on them, but right now our life of mine looks like about 7 years. We certainly believe that this will be going for decades, not just 7 years or even 1 or 2 decades. It'll be a long time in the future, and I think we got some great exploration upside potential. We also have regional consolidation opportunities. We're the only game in town, and we also have, don't forget, the Shafter mine that we could bring online. Just one point before I close. The feasibility study on this project was done at 270 tons a day. The mill has a nameplate nominal capacity of 500 tons a day. We can take advantage of that on a go-forward basis and ramp up from that 270 up to 500 tons a day. And that really equates to from 3 million ounces up to about 5 to 6 million ounces. Bring Shafter online in 18, 24 months from now, and we're up to that 8 to 9 million ounce mid-tier producer. So I think we've got a good outlook here. We certainly feel at today's prices, we are very undervalued, to say the least. Our share price is in the 90-cent range. Did I lose? Oh.
Nope, we can still hear you very, very clearly.
Oh, sorry.
We can't see you.
Oh, okay. Don't quite know what happened here.
I can go I can go and see and hear you like clearly, Kevin. I had a feeling that there might be some internet connection problems, but maybe from my end here in Essex, England. So you probably have me to blame, Kevin. But I can actually hear you clearly.
Right, but okay, I'll just finish up very, very quickly here. And we're about half, for instance, our closest comparable in the business, probably Alexco, just gone into production. We're about half their market cap. We certainly feel that we will deserve a re-rate once we get ourselves into production here, which is going to be very soon. So with that, I will stop.
Okay, excellent. We have a couple of questions from the audience. First one, a bit of a technical question. Kevin, you said that you have pure silver with no other co-evolved metals present. Is that claim backed up by AA spectroscopic analysis?
Yeah, when I say that, this is the Shafter mine, of course. The Revenue Virginius mine, we do have gold and lead and zinc credits and considerably. But at the Shafter mine, we have minimal base metals. It's an oxide ore body kind of thing. Although there is some gold there. There is a little bit of gold, but we permit to a large extent that there's certainly no economic byproducts that we see at this point in time.
Okay. Second question from the audience. What is grade, tonnage, annual production, anticipated recovery percentages from various metals? And that comes, I think, from a good friend of yours, Robert Schaefer.
Hey, Bob. The recovery at the Virginius mine for lead is about 96%. Silver is right around the same thing, 95, 96%. Zinc is a little bit less. It's right around, I believe, 86 to 88% recovery. Can't remember what other ones were in there. The lead grade is 67%. Zinc grade 56% on the concentrates. Those kinds of things.
Okay, excellent. Richard, what questions do you have for Kevin?
Yeah, so Kevin, you kicked off. Aurcana was kicked off as the play, the silver play in Colorado, 30 million ounces, and you've been able to continue that to imminent production in July. So that's on target, and that's great. And then you've got the Texas Shafter mine that you can turn on essentially whenever you want. And now you've been acquiring territory, land in Colorado as a consolidation play. So is this your aim then to turn Aurcana into a mid-tier by essentially consolidating land, increasing the ounces to become a mid-tier silver play? And if that's the case, how do you see that happening over what time and what capital, what additional capital are you going to need?
Yeah, less so about the regional consolidation. I mean, from where we sit right now today and just looking at what we've got, we have opportunity on a regional consolidation basis. There are some very interesting properties that are available, within a half-hour trucking distance of where we are right now in our mill. We're the only mill in town, but we've got the Revenue Virginius vein. It's 16,000 feet of strike length that we've got on that. Our resources and reserves are pretty much contained on only about 4,000 feet of that 16,000 feet. And that's only one of 9 veins. We have a mill that's designed for 550 tons a day. We have a startup plan to start up at 270 tons per day, which is less than, it's half of what our capacity is. Our production rate based on that 270 tons a day is about on average 3.2 million ounces a year. So we need 2 stopes operating underground to deliver 270 tons a day to the mill to get that 3.2 million ounces. We will have, by the end of this year, we will have the capability, we'll have 4 stopes prepped and ready to go. We have the capability of bringing another stope online for 100 tons a day, get up to 400 fairly quickly, I think in early 2022. That would take us probably another 1 million ounces of silver production a year. So now you're into that 4 to 4.5, million ounce range. And you can similarly do that with another stope, bring it online. You'd have 4 operating stopes, be at 500 tons a day, and be upwards of 5 to 6 million ounces just organically. Now, the cost of doing that, and we have to be careful in the timing of doing all this, simply because narrow vein mines are such that you have to have your development far enough out in front of you so production does not bang up against production. So the idea being is that we haven't had enough time to get development done, to get those 5 or 6 stopes available. So we've got 1 or 2 that's emergency that we can bring on if something happens. And we know something will happen, we just don't know when. So organically, we can grow this mine, up to, I think, easy 6 million ounces, and probably even higher than that, and then bring on Chapter. And that it does not even take into consideration the exploration potential of these other 8 vein and the potential of the regional consolidation.
But is it true to say that your real focus is to bring the Colorado mine into production in July? Is that your major focus?
We are laser focused on that. That is, I've been asked questions about the exploration and all of these other things, but our primary focus right now is absolutely get ourselves into production, get cash flowing. Then we can, this thing is going to throw off a lot of cash in a very short period of time. There's a lot of competing needs for that cash. We've got a debt facility where we want to pay that down. And there's a good chance. We have Chapter that we want to bring in. It's going to take some capital to do that. We have exploration that we want to do. So, from the perspective of where that money goes, that's something the board will, give us some strategic direction on what we want to do with that money. But, those are some of the uses of it.
Yeah. Can I just ask David a question, Andrew?
Yeah, please do.
So, David, you're not as advanced as Aurcana, but I know you have a very strong and very careful vision of Kuya. Do you see Kuya essentially as being just less mature, but sort of moving in the same direction or a similar direction to Aurcana?
Yeah, I mean, basically we've got a mine that was producing a few years ago on care and maintenance. And we want to put it back into production. I would say the big fundamental change that we want to make to this mine is to have our own mill there. Whereas previously it was a toll milling operation where they would mine the silver polymetallic ore and then truck it all around the Andes to have it processed. So we want to process it on site, and we think we can lower costs and basically capture a lot more of the margin that way. And that's what we're working towards.
Right. Well, that sounds like a good plan. And as far as I'm concerned, you've done exactly what you said you were going to do. The market believes you, and your shares price reflects that, as being trading right around between 220 and 290. So I wish you a lot of luck, and I think you've done a great job. Both of you have done a great job. Both you, David, and you, Kevin.
I think we've just got about just over 5 minutes left of today's show. So if everyone's got any questions, then please post them in the chat box. There's a question that was sent through earlier that I'm going to ask to probably David first and then Kevin. It's quite a long question. Would the mining companies benefit by rebranding silver into a superior conductor to copper rather than a precious metal? On the commercial side, selling the product to OEMs, which use silver industrially, could silver be tied up into use in the upcoming electrical grid builds in some areas? I'm going to ask that to you first, David.
Well, it's really 3 questions in one. I think, to the extent the silver companies, we have ways we can work together and obviously promote silver. It's not something that an individual company really is going to, has the responsibility to do. But look, I mean, it makes a good point. The electrical conductivity is really silver's secret sauce. and why it is used in so many electronic applications, and the growth keeps on moving forward, especially as we go to lighter and smaller instruments, and also green technology. In both of those cases, silver is really critical, and there's sort of a little bit of silver in almost every electronic device that you can think of. So silver's got a great story there on the industrial demand side. And in terms of selling right to OEMs, well, look, the vast majority of silver companies don't actually produce the silver metal. That's done at refineries. So we produce some intermediate product, whether it's a concentrate or doré bar, and then sell it on to a refiner. So there is sort of a middleman or a middle step in there that I mean, a company could vertically integrate. We have not seen that yet in the industry. It's something that, if the demand keeps going up and the price keeps going up, maybe we will see that. But
okay, thank you for that. Kevin, do you have anything to add?
Not much. I recently spoke with somebody, I'm not sure who it was, about this dealing with silver at the more at a retail level than the way we do it right now, David. And in terms of we produce it, send it to a smelter or a refiner, and we just sell it for whatever the going price is. But there's certainly value added works that you could do with that. And I think there's at least one fund in the United States right now that's starting up to try and do exactly that, which would be to market silver in a little bit of a different way than the way it's been traditionally. As for its replacement for copper, I think that would be really hard to do for silver to take the place of that, globally kind of thing. The rarity of it, for starters, and the quantity required is just, I mean, there's no comparison between the two, really. So I think copper is going to be around for a long time. And but as David says, silver is used in almost every piece of electronics that there is these days. I think, even with that, we've got a great future.
Okay. Richard touched on this earlier, and I think it's probably a question for also like three of you. I didn't read the quote. I guess obviously sort of like silver's obviously been in the news quite a lot this year with regards to what happened with regards to Reddit. Do either of you have sort of a take or an opinion on that?
I do.
Sorry, Andrew, I missed.
Yeah, sorry. The question really was about sort of like the news with was obviously what's been happening with regards to silver and Reddit this year, and whether any of the panelists had a view. So I think Dave's going to have sort of like the first stab at sort of giving his views on that.
Yeah. Well, I'll give you my 2 cents worth if you want. I think that's bad for the business, to be honest with you. That they get in, they push the price up, kind of arbitrarily, with no fundamental basis behind it, and it invariably does what everything does. What goes up comes down, and it just. I think we're better, in terms of the basis of the fundamentals of supply and demand and the uses of it. And although it's great, you make some short-term great coin when you're doing that if you get in at the right time. I'm not so sure long-term it's that great for us.
What do you think, David?
I will respectfully disagree. I think if well, look, like volatility and pushing the price up for no reason you're right. That's not great. But if you look at actually what happened with the Reddit, short squeeze, what happened was most of the money that people invested in that, in that fateful, Friday and Monday went into SLV, because at the time that was sort of the largest liquid silver, physical silver product out there. And, the price sort of went up a few dollars and went back down again a few days later. And then I think what's happened since is people have sort of been educating themselves about the different ways to buy silver. I think, and I think that's actually been a really positive thing. So people are a lot more investors and younger investors are sort of understanding the differences between buying, a silver coin, a 1,000-ounce silver bar, PSLV, which is another exchange traded fund, versus SLV, and which ones have sort of the best, and which ways are the best levers to bet on a higher silver price in the future. And so I think I do actually feel like there's some really good things happening. It's sort of more of a groundswell. And I think, if you actually look at what happened with the Wall Street Bets situation with GameStop, which is obviously, that's the high profile company that they targeted. It didn't happen overnight. I think there's this sort of media story that just one day everyone woke up and GameStop went to $400 a share. That's not what happened. These guys were sort of, these guys were telling the story for, I think, a full year before the real huge moves happened on GameStop. And, gradually more and more people got involved. And look, silver is an even bigger market than a single stock is. So it's gonna take more money. But I think it is possible. And I think that, combined with just a general bullish market in general, could be really, really good for silver.
Can I make a comment, Andrew?
Please do.
Look, I think both David and Kevin are right. I just like to add that, look, there's two types of people. You've got the traders and you've got the investors. I'm more of an investor. I go for the longer ride because I think that's a better bet. Excuse the pun. The Reddit crowd are the young crowd that feed off social media, and how much due diligence on silver, let alone the companies, are they doing? Well, most people would say very little, negligible, or none. So they're the traders. Good luck to them. Everybody likes to make a buck, and nobody should decry that. But if you really want to make real money, it's going to take longer than a few days or a few weeks or even a few months. And most people who play for the longer term, more than a few weeks or months in commodities, are not traders, they're investors. And that's why these two companies are a good bet, excuse the pun, because they're really going to execute. But good luck to the Reddit crowd. It's a new phenomenon. They'll come in, they'll go out. A lot of them will lose money. Some will make money. But the good news is they shine a light on the macro silver market. So we all love them, really.
And I think on that sort of like positive note, that brings us to the end of today's 5 at 5 show. All that remains for me to do is to thank our guests, to go and thank our sponsors, Aurcana Resources, Kuya Silver, as well as Ignite Capital and the Resource Global Network. See you next time, next Thursday. Until then, stay safe. Thank you very much. Bye-bye.
Thanks, Andrew.
Thank you.
Bye.